I think that tax is a necessary evil. Government needs money in order to provide us with services, but I don't think we should pay any more tax than is absolutely necessary. So let's look at what you can do to make sure that you don't overpay your taxes. Some of the things you can do are invest wisely. For instance, are you using your ISA allowance, your ISA allowance? An individual savings account is a tax-free savings account that can be held by one person. You can't hold them jointly. You have an annual allowance at the moment, £20,000, and you can put that into cash, stocks and shares, or investment funds, but you can't invest more than £20,000. When you want to take the money out, it is tax-free. This is now £20,000. And some people have built up very substantial portfolios using this allowance every year. It's an annual allowance. If you don't use it, you lose it. And I still hear people say to me, oh, but my money's locked up if I do that. And it isn't. The very, very first type of ISA was actually called a PEP, and that was time limited. But modern ISAs are free to access at any time. And a modern flexible access ISA will actually let you take money out during the year and put it back without going over your £20,000 allowance. Most ISAs are held within your estate for inheritance tax, so they could become subject to tax then. But if you invest in AIM shares in your ISA, then you get a double benefit, because AIM holdings should be eligible for business relief and be outside of your estate after 2 years. So that means that you get a double whammy. So the first thing to do to look after your tax position is to use your ISA allowance if you want access to the money in the near future. I'm going to cover some other items in other videos.